Okay, good evening once again. This is again Charles Kafel. Last time we stopped on cost classification and we had left one part which was classification by behavior, and I told you I'm going to add more clarity on the cost behavior concept. First of all, cost behavior is the way a specific cost reacts to changes in activity levels. Here we are trying to look at how costs are going to be behaving, especially when the level of output or level of the activity level of activity changes. So here the most important aspects we are going to be handling, those are the variable costs, the fixed costs, and the mixed costs. First of all, the variable costs, those are the costs which vary proportionately with the changes in the level of activities. And we say those costs, they not only increase as the level of activity increases, but they increase in the same proportion to the increase in the output. Then the fixed costs, these are the costs which change with the level. These are costs which are not affected by the changes in the activity levels. For them, they don't change at a certain degree. They don't change even if the level of activity changes. But as I explained earlier, that fixed costs sometimes they change with when the level of activity changes. But the cost itself remains constant after a step up, and those are the stepped fixed costs, as we shall see. Then the mixed costs, of course, those are the costs which have both a variable component and a fixed component. So as I told you, this cost behavior is an example of a cost classification. So it's one of the ways we can classify costs, by checking how the costs react to the changes in the activity level. So allow me kick off. I analyze them in details, and towards the end of the video, I'll give you some calculations, some small calculations of how you can easily understand what we are going to take to study as the theoretical aspect. Variable costs, these are costs that vary in direct proportion to the volume of output or activity level. So we said they vary directly in a direct proportion. When the output increases, they increase, but in the same proportion. With a variable cost, the cost per unit stays the same. Yes, the cost per unit is the same, but the more units produced or sold, the higher the total variable cost. For example, the cost of materials, wages, like in an organization, you may be having a hourly rate, or the rate at which you are paying your employees. If let's say you are paying them on time basis, You may be paying them 10,000 per hour. So the 10,000 is a constant amount, but depending on the number of hours someone works, he or she will be able to get, the more the person works, the more the person will earn. So if let's say the 10,000 is the hourly rate, and you find that the person has worked, let's say for 8 hours, you multiply the 10,000 times the 8 hours, you get the same, the amount the person is going to be paid. But it will not be the same like for someone who has worked for 3 hours. You'll get the percentage will be the same as in the 10,000, which is the hourly rate, but everyone will be taking a different amount of money depending on the number of hours they have worked. So when we talk about the activity level may be in terms of units, maybe in terms of number of hours, maybe number of machine runs, maybe anything. Maybe even the hourly rate, as we said. But the activity may be in terms of hours. Okay. Variable cost per unit is constant at all levels of production and can only change if manufacturing environment changes. You may be working in a normal situation whereby you've been producing 10,000 units. If let's say they have been paying you per using piece rate, as we shall see when we go to labor costing. And there are some scenarios, or let's say the machine breaks down. You may find that the number of units you are going to produce, they are going to reduce. But that was as a result of change in the manufacturing environment. We are producing more units because all the machines were working. So that's how we can increase the variable cost per unit. Graphically, we can illustrate this as the total cost. The total cost line curve slopes upwards. Why? Because we said as the output increases, we are expecting the costs to also increase, but they are increasing in a proportionate way. So the same amount of cost, if let's say for when you produce 1 unit, someone is paid, let's say 10,000, and that 10,000, when the person produces 2 units, it means the amount of 10,000 which is paid per unit is going to be doubled by 2. That's the same proportion they are talking about. That's why the total variable cost curve is sloping vertically from the starting point. The reason as why it is starting from the starting point is because when the company is not producing, we don't incur variable cost, because we said those variable costs are incurred as per the unit of output. When we don't produce, we are expected not to incur variable costs. But for the variable cost per unit is constant. That's why the second curve is a horizontal, meaning whichever amount or whichever output someone produces, that person will be getting a fixed pay per unit. But for the total cost, for it is the accumulation of the number of units someone has produced multiplied by the number of the unit variable cost to get the total variable costs. So we go to the fixed costs. We said fixed costs, these are costs that stay the same in the total regardless of the number of output produced, but to a certain point, as I'll explain later when I'm doing some illustration. you'll appreciate the fact that sometimes fixed costs may change. But as for now, let's proceed that these fixed costs are the cost that stay the same in total, regardless of the number of units produced or sold. Although total fixed costs are the same, fixed cost per unit changes as few or more units are produced. In this case, we can talk about the straight line depreciation expense. When we are removing a constant amount, as the depreciation expense is the same, but we are removing it the same regardless of the amount. Remember, when you take, let's say, if you have bought an asset of 10 million and you take 10% of the 10 million will be 1 million. That 1 million, even next year, we are going to keep the 1 million, but remember the net book value of the asset is going to be reducing. When you take out the 1 million, the net book value will turn to 9 million instead of the 10 million. But the depreciation expense will remain the same. The total fixed cost, we say they are constant at all levels of production. That's why you are seeing the total cost, the total fixed cost curve is horizontally, meaning at all levels of production, we are expected to be doing exactly the same because even if you see here, the cost is the same, but at a different activity level. As you can see here, we are incurring the same cost. That's what we mean by that. Then for the unit variable cost, for it keeps changing, because when you get the number of units we have produced, you divide by the fixed cost, you will see that it keeps changing. It will be varying. And that is how it is. We can continue to our let's go to our next thing. And that is the semi-variable. Now the mixed cost, we are dividing them into the semi-variable and the semi-fixed, because here we are talking about the semi-variable. These are costs that have both attributes of variable and the fixed elements. They have a variable component and a fixed component. The reason why we are incurring that fixed component is that we are trying, that is the cost you incur for the service to be available or for the items to be available. It's like the minimum you are incurring for the service to be available. This one is usually done for these sales agents, because when you are paying a sales agent, most of the times they pay them a retainer, and that retainer, it is regardless of the number of units they are selling. But they give them, on top of the retainer, they give them commission. So that commission keeps varying on the number of units you are selling. When you sell more, you are expected to be getting more. That's meaning the retainer will be the fixed component, then the commission itself will be the variable component. We say these are costs. These costs have both attributes of variable and the fixed elements. The fixed component is charged to make the service available for consumption. they partly affected by the fluctuations in the level of activity. Fluctuations in the level of activity. In the level of activity. We have utilities, we have salaries to sales person with a monthly salary and additional pay for the product sold. We have factory, supervision, that's maintenance, among others. As you can see, the total cost, the total semi-variable costs, it starts as it is horizontal, then it becomes a stepped up. There is an inclining amount depending on the number of items that are sold. As you can see from here to here, the person is paid a fixed component. You can call it, let's say, the monthly retainer for the sales agent. Now from here up to here, that one is a variable component, whereby the more units someone produces, the more amount is going to earn, because you're seeing it is slanting like this, meaning the more you sell, the more you earn. The more you sell, the more you earn. That's how it is. Then the unit variable cost, of course, the unit variable cost behaves as a variable cost. For it is a straight line. Yeah, and that is it. Yeah, that is it. Then we can proceed to the next one, which is the semi-fixed costs. These are mixed costs, which are influenced by different ranges of output. They are influenced by the different ranges of output. Such costs change as a range of activity or output is adjusted. It is the same thing I was telling you, that sometimes fixed costs, they change, and this is what it is, the semi-fixed costs. An example we can talk about is rent. When the rent paid for, or if an organization pays rent for storing, let's say, the output produced, you may find that the capacity of the building can hold certain amount of items, to the extent that if you put more than what the company, what the building can accommodate, it will not be fitting there. So you will need to incur another cost, another similar cost of rent to accommodate the number of units which have exceeded the range. Here we can talk about another example as the transport based on the number of tons. If transport cost is charged depending on the kilograms or the weight of the items someone is transporting, you may find that the person with high weights or tons of a certain product will be paying higher costs than the other. Then the other one you can talk about if it is in the distance. If the transport cost is paid in the distance covered, the more you cover the distance, the more they will pay the costs. Yes, the transport cost is fixed, it is the same, but it is changing as per the range of the activity level. Then you have also the supervisory cost based on number of workers. When you are paying supervisors, they supervise according to the number of workers. When the number of workers increase beyond a certain range, then you are supposed to pay them an extra income for supervising those people. As you see the graph it starts from the point where as you see from when the output is X or X, the level of supervision is constant, that is P, from it is OP. Meaning, as the number of units exceed that range, we are expected to incur an additional. An additional means, it means we are starting from where we are paying. If let's say the rent expense was 10 million, you will see that if we are starting from the 10 million, we are stepping up to a certain amount, let's say 10 million. Meaning from OP, it will be the same as from PT, or it will depend on the amount someone is being paid. Because you may find that in some scenarios, people are paid, if let's say the output goes to a certain range, they add some small, it depends on how they organize to pay for the additional output that has been produced. Because even here you are seeing we are paying the constant amount, but it has just leveled up from here, from OP to OT, then from OT to another level, depending on the number of units that are being produced. So as you have seen, if the firm plans to produce in a range of OX, it will pay fixed cost of OP. Should it change to a different range, say XY, then it should be ready to pay an additional cost amounting to OT. Meaning it is from OT, because we are including what was paid when we were producing at OX, and the one on OY. So that's how it is. And from there, I think you can understand how these things coming to that the fixed costs doesn't necessarily mean that they don't change forever. Sometimes they may change. And actually, that's what I wanted to talk to you about, this cost behavior. The cost behavior pattern is a bit challenging, because at certain point you may find they have given some calculations, and you have to see how you can draw these graphs using graph papers and all of that. You illustrate, and this is what I'm going to do. Let me share. There is a number here I did. We assumed that variable cost per unit to be at 20,000 or 20 shillings. Made them in shillings, and this one is in shillings. And this one is in shillings. So you may see, as we say, that the total cost is an example of a mixed cost, because a mixed cost has both a component of a fixed cost and a variable cost. So to get our total cost, it is the fixed cost plus the variable costs. When we get the fixed costs plus the variable costs, we are getting the total cost, and that total cost represents our mixed cost. So this one is going to be the mixed. This one is a mixed cost. When you see that, you just know that that is a mixed cost. Then this one is our total fixed cost. We can call it A. And this is our variable cost. But the variable cost has a component, has units, number of units, times the variable cost per unit. This is the formula for defining the variable cost. The variable cost, number of units produced times the variable cost per unit. That's how we get the variable cost, the total variable cost. So we say the total cost equals to the fixed cost plus the variable costs. But remember, to get our total variable cost, we multiply the fixed costs times the fixed cost times the number of output. So we assume that we are producing from 1 unit to 12 units. And we also assume that the fixed cost, since it is not changing, we maintain it at 10,000 within a certain range. As you see, from 1 to 4 units, we are charging a total fixed cost of 10,000, or the 10 shillings. Now the variable cost for it is constant. As we said, the variable cost per unit is constant at all levels of output. What changes is the total variable cost, but it changes in a proportion to the level of output. We can try to compute for this. If you want to get the total, if you want to get the total variable cost, it will be the number of units, which are 0 units at when you are not producing, those are the units, times the variable cost per unit. It will give us a 0. The reason as why it is giving us a 0, because when you are not producing any item, we expect to incur 0 total variable costs. That's why here you are seeing, when you come here, you are seeing there is a 0 somewhere. That's why here there is a 0. When we produce 1 unit, it will be the 1 times multiplied by the variable cost per unit, which will give us 20 shillings. And this 20 shillings is the value you are seeing here as for as far as for the total cost, total variable cost. Then if you are to get the variable, because we say the fixed costs, we incur them even if we are not producing. So to get the total fixed cost, it will be getting the total fixed cost, getting our total fixed cost, it will be the fixed, to get the total cost, it will be the fixed cost, which is 10 shillings plus our variable costs, which is 0. And that gives us 10 shillings. So even when we are not producing, the total cost is increasing. Is there, we incur the total cost because we had already incurred the fixed costs. So the implication here is that when you are drawing total fixed costs, that means total fixed costs, they are not starting from 0. We start from where the fixed costs started or where they ended. So to get, you can keep multiplying 2 times the 20,000, you will see that you'll be getting 40,000, meaning it is growing in a proportionate way, meaning when I incurred the 2,000, remember the variable cost per unit was 20 shillings. So it will be the 20 for this first unit and the 20 for the other unit to become 40 shillings as the total variable cost in the production of 20 units. So when I reached on this 51, at this one, we assume that when we reach here, we assume that let these first costs, the fixed cost, we assume that at this company, when it produces the output, the 4 units or the 50 unit, the capacity of the building can only accommodate 4 units. So the 50 unit, the company will be required to incur an extra cost, and we assume the extra cost to be 5 shillings. When you add the 10,000 plus the 5,000, we get the what? We get the 15,000, which will be our new stepped fixed cost, whereby that we have exceeded the range we had assumed. We had assumed that our range is going to be these 4 units of output, or 4 kilograms of output. So when you increase that one will only have an effect on the total cost, but not on the variable cost. For the variable cost, it is the same. It keeps changing with the level of output. But for the total cost, because when you add to get the fixed cost in these 5 kilograms of output, it will be the 15 plus our new variable cost, which is 100,000, which gives us 115 shillings. This 115 is the what? Is the new total cost. But that 115, it would have been 110, but because we had a stepped fixed cost of 5 shillings, so it made us to incur an extra cost of 11 and 15. 115. So if you are to draw this curve, then it will be, it will reach at a point for this total fixed cost, it will be moving horizontally, but when it reaches the 5 kilograms of output, it will increase by 5, and then it becomes constant until it reaches to the 20, whereby the another range will be exceeded, whereby we will also incur an extra 5,000. We add the 5,000 or the 5 shillings to the 15 shillings to make it 20. But what you want to, what you have to know is that when you want to, if you are defining the variable costs, we say these are the costs which vary in proportion to the changes in the level of activity. If you just ignore out the word proportion, it will be wrong to the extent that even when we are seeing these total costs, if you just say that variable costs, these are the costs which change with the changes in the level of activity. Because even these total costs, they are changing. Are you not seeing that they are coming from the 10 to 30 to 60 to 70 to 90? They keep on increasing. But the difference is that they are not increasing at the same rate or in proportion to the output. This one is increasing, but it doesn't increase in the proportion. Like for this one, the variable cost, you will see that when you get, let's say we use the last one, which is 240. When you divide it by the number of when you divide it by the number of units which are, you will be getting the same exact amount of $20 or 20 shillings we've incurred. But if you divide the total cost of 260, divide by the number of units which are 12, you will be getting a different answer, meaning that they are not in what? They are not in proportion. So when you forget about the proportion, then you are defining a wrong, you are giving a wrong thing. So that's why I was like, when you're explaining, make sure you put the word proportion to distinguish it from other costs which keep also increasing as the level of activity increases. Then the other thing, for the fixed variable, for the fixed costs, that's why we said we have to put within a relevant range, because when the output exceeds the range, then we are supposed to incur an extra cost. That's why when you are defining the total fixed cost, you have to say that these are the costs which do not change with the level of output within a relevant range. I hope there we are clear, and I hope that one has helped you a lot to understand what we really mean by the variable costs and fixed cost plus the mixed costs. Then the other thing I wanted to clarify more is that these costs, there is how you do the separation, the cost segregation, of which it is going to be our next video, and is going to be how to segregate these mixed costs. We get the variable component and the fixed component by using our methods, the high-low method, using the least squares, using other, there are so many methods we can use to separate those costs. And that one, I'll do a video of how to segregate those costs when they have given you a complete cost with a different activity level. So allow me stop here for today. And I just encourage you guys to subscribe because there is a lot which is coming. And I hope this video has been very helpful for you. Until we meet again, it's bye for now.